Today we're going to talk about the 5 things that you need to know for real estate investing in Canada 2023. What's going on, everyone? My name is Andrew, and on the topic of real estate investing in Canada for 2023, whether you're a new investor, an experienced investor, we need to know certain things in order to make our decision for a real estate investing strategy. Here are the 5 things that we're going to be talking about today: property value, different markets, interest rates, rental prices, and finally, the real estate investing strategy that works best for you under these circumstances. The big buzz that we're hearing around property values is that there's a big decline in real estate prices. People are saying that there's a 25% drop, a 30% drop, but if we really zoom out in the big picture and look at the 2021 prices overall, we're still about there relative to everything else. So the next thing we're going to talk about now is markets, because a lot of people in 2022 were just scrambling to find a property that they could buy. They could afford properties because interest rates were low, and they're just trying to buy something that they can afford because property values were going crazy high. But if people want to sell properties that are out in the country, there is a significantly reduced market for people who are able to buy those properties. The average income in Canada is something in around the $58,000 mark. So in terms of what they can afford, when you combine that with rising interest rate, it's not like people are able to buy these countryside homes for the values that were purchased at in 2022. But that also means you can potentially score opportunities if you find people who are in bad situations out there that need to sell. Whereas if you comparably look at markets that are in Toronto or in Vancouver, you see property values actually holding pretty decently as long as they didn't go onto the luxury side, or at least there is still traction. This is where you start to see the integrity of a city and the demand for people moving into the suburbs of Toronto or into the little neighborhoods that actually offer real tangible value such as convenience, work opportunities, and other such things that people want to move into the city for. These are all contributing to the consistent demand, regardless of the difficulty, to purchase those properties. And that's why those properties are still selling pretty decently, where other properties in different markets are faltering. But all these things are happening for a reason, which brings us into our third point, which is interest rates. Interest rates are high. Interest rates are unaffordable. Are they going to continue raising interest rates? These are all things that people want to know and people are wondering about, but how is this going to be affecting your decision as a real estate investor for 2023? The stress test that we were being given by big banks when we were getting mortgages in 2022 and even 2021 were generally between 5 to 7%. So if you consider that, and Bank of Canada is looking to raise interest rates to where it has already, we're looking at variable interest rates of 6.7% right now, which means that if interest rates go up to 7%, they are expecting that people will start to default and lose their homes if they can't pay their mortgages. Is Canada really going to push people to the brink like that? So you just have to make sure that you're budgeting according to how the market is today. Which brings us to the next point, which is rental prices. And with the interest rates the way that they are and having gone as high as they did, now that puts all these people who would be buyers into the rental market. And these are very qualified people because they probably had a bit of a down payment, they had strong enough incomes. It's just that the stress test became higher and their take-home income wasn't enough to anymore cover the bills that they would have to pay with those increased mortgages. I've seen people selling their homes because they're paying too much in interest, so rental prices as a result are going up. So what does this mean for people who are in multifamily investment properties who have a spread of rental units that they control and are having some turnover with respect to their rental units, and they can increase the rent? So that is definitely having a huge effect on those multifamily property values. Which brings us to our last and final point, which is strategy. What real estate investing strategy should you be employing in the 2023 market? And everyone has their pros and their cons. For example, we have the BRRRR strategy, we have house flipping, we have buying long-term holds, we have midterm rentals, short-term rentals, land flipping, severance. But what I find is generally reliable in this market, at least from our portfolio, we're seeing that mixed-use commercial and residential properties are holding pretty steady, and any property that is performance-based, where when property values get affected and people are having challenges buying property and they're being pushed into the rental market, if you are controlling rental units, you have flexibility and maneuverability to adjust. Which brings me to the one that we're still sticking with, which is house flipping. And this is where we tell people that as long as you're house flipping within the scope of your current market, you are going to be in control. And when we look at the BRRRR strategy, we actually only use that as a plan B, not a plan A, because as long as we can buy property at the right price, we can flip it and make it desirable for whoever we want to sell it to. So these are some of the pros and cons to the different strategies that you can employ and some of the things that we're focusing on based off of what is performing best. But if you want to know more about real estate investing in Canada, we are offering coaching programs teaching you how to invest in Canada successfully and profitably.